Hi, good morning, everyone. Today we have Neeraj here on the podcast. Neeraj, welcome to WaterBridge.
Thank you.
Neeraj, I would love to know your and Anil's background.
Thanks for having me here. Hopefully, I can share some things which can be valuable to anyone who's looking at it. Anil and I, we know each other for almost 14, 15, 16 years now because we both went to college together. We were both at BITS Pilani. He was from 7 to 12, I was from 8 to 12. But we knew each other through the common circles. And after we passed out is when we started thinking about starting up and other things. I've always wanted to do something of my own, but I didn't know what was startup. I used to call it business. I used to tell my family I want to do a business, and Anil was in the same thing. After I passed out, when I joined Flipkart, that's when I realized, okay, this is startup, right? I didn't have an idea of what was the advantage for someone like me, where my father worked in a central government office without any business knowledge. How could we start business? That was my family and my parents' question, right? But then once the startup thing came up, the realization was, hey, people without a family business background can also do something. So at that same time, we realized that Anil was also interested. And so we started connecting and we would keep talking. I was at Flipkart from 12 to 15, joined as an engineer, moved into a product management role. Then I started this company called Hungerbox. We started it in 2015 as a meal delivery service, then pivoted it into a cafeteria management service. When we started, there were five other players trying to do something similar with food, simple meal delivery. We were the only ones who pivoted to a B2B business, and everyone else kind of kept doing B2C and they all died.
Right.
Today, like Hungerbox is the only player which survived from that time and did well. And today, Hungerbox is like the largest cafeteria management service in the country. When I was exiting, we merged our business with another startup, and the other founders continued running the business. They have done like a great job in making it the largest cafeteria management service. There's a small feeling of gratification that I start something which is helping a lakhs of people on a daily basis to have slightly better experience when they're having their meal in their office and all those things. And even at that time, we were discussing, Anil wanted to join us as a co-founder, but for some reason it didn't work out then. Then again, when I came back to thinking about a startup, that's when Anil was in Malaysia at that point of time. He had had a parallel journey. He was at Hike Messenger till 2015. He was trying to do something on his own. He worked at a few startups, and then he went to Malaysia to lead product and tech at the startup called Cowdim. So we were having similar journeys, working at startups, trying to do something before, learning from the ecosystem, friends, family who were doing these things, and seeing how the world was changing. And I think by the time we were starting again, we were wiser because some of the choices we made have allowed us to do better than many of the other people who tried starting this business at the same time. What's kind of co-founders work together well? This is my philosophy that it's not about the skill set, because the skill set you can get someone, right? Let's say many people think about, hey, I'm good at operations, let me get someone good at marketing and one more guy who's good at tech, and we'll build a great company together. The reality is, you can hire a great marketing guy, you can hire a great tech guy, but the bond between founders should be built on a lot of trust. That's the most important thing, rather than the skill, right? Like you may have even overlapping skills, right? Let's say both of us came from a product background, so it was not like we had very complementary skill sets. That's where many people asked, yeah, dono same cheez karte ho, how will you add value to the company in a different way? But the reality is, we have never gone back and said ki, yaar, if Anil is going and doing something, can I trust him to do the right thing for both of us or for the company?
Right.
There'll never be a question in my mind or his mind that allows us to give the freedom and be very comfortable of continuously not looking around each other's shoulders, right? So I think that's, in my mind, very, very important. The other thing is value system. If he's looking at saying ki मेरे को जल्दी जल्दी बहुत पैसा बनाना है, whatever way it is, and I'm like नहीं, मेरे को जल्दी नहीं करनी है, then we are always at odds against each other, right? That does not mean we don't disagree, but the point is, your broad value system should be similar. Don't look for skill set. Skill set can be hired, but look for trust and comfort with each other rather than just optimize for on paper looking good founders, because I've seen like a lot of people who got together quickly also went away quickly.
I think at this point, I would take a step back and try to understand more towards the origin of wanting to build in retail. Why was retail at that point of interest?
Sure. So I don't think retail specifically was interest when we started, right? We wanted to do something which is going to be valuable for a long time. We saw many business models which were being built, and we can very clearly see here this is relevant for 5 years. This is relevant for 8 years, 10 years, right? And then we also wanted to find something which had some structural advantages as a business, right? You build it, but you don't have defensibility when a larger guy comes. So even in our
Absolutely.
business, people ask you, hey, Reliance will come, like, DMart wants to do, or any of the big guys do. You won't have a structural advantage. That's not the case, right? We build structural advantage through and through, because every time we think of a problem statement or an extension to the idea, we look at it. Should, if it is difficult for us, it should be difficult for others also to do. It can't be that it's difficult for me but it's very easy for someone else to do it after 5 years. Then I'm playing a short term game, right? Again, so that's where we wanted to kind of focus on building a structural advantage into the business. And when we looked at these ideas, you should figure out where there are tailwinds, and building up a startup is naturally hard. You don't want to be playing a hard mode as well. And there were a few trends which we were looking at, right? One good part is Anil was based out of Malaysia, so he had a perspective of how retail had changed over there. He had traveled extensively across Southeast Asia. And Southeast Asia is very interesting because they've had good retail experiences, franchise models. All your large retail brands of convenience stores have been built in Southeast Asia. So there's convenience retail and even grocery. Both of them are fairly organized in Southeast Asia. And it's not like those countries are like significantly richer than India. We'll get there in 5-10 years. So that means as we get there, more or less, this kind of experience will also get created. So that was an outside in perspective. But from an inside out perspective, when we went and traveled these towns, right? I mean, why did we pick a small town versus a big city? We also wanted to create an advantage for us as founders. And we saw most people were not comfortable to go and live out of a small town. Now, if I can differentiate on that, if I can go to a small town and do something there, it will give me a starting advantage, because most people might not want to do that. And also the city markets are like too many people solving for them. So we went to the small town, looked at that, realized that the aspirations were similar. Maybe they were like 5 years behind, let's say, a Bangalore or Hyderabad, but it was happening, right? Because in those 3-4 years, when I saw a sea change. People were trying to consume better. There were new coffee shops coming up. There were new apparel stores coming up, ice cream parlors, salons. Everything was happening, right? Like brands like MedPlus and Apollo Pharmacy went to the very, very small towns. And when you went there and kind of looked around the market, you can very clearly say in 5 years this will be really, really different. There was this thesis coming out that small town customers will consume better, so there is an opportunity to build branded experience for them. And the second thesis was because my dad was not in a business, but all my family was running kirana stores for like last 40-50 years. Anil family was doing that, so I had some sense. So that's where we started seeing that, hey, this is the largest category, least organized, and there is a clear brand play happening across categories. So maybe when in these things fit together in your mind over a 6-month period, right? Today I'm putting it in a minute, but we started thinking about brand, we started thinking about grocery, and at some point it started merging and said, hey, sure, let's build a brand of grocery stores and provide that experience. And that's kind of how we started off and start building.
Very interesting. No, thanks for that, Neeraj. Now that we're on the topic of grocery business, right? Would be interesting to understand, when you're ideating this at the point, what are some of the friction points you're noticing in the general Kirana store experience? We've seen the difference between the tier one to our tier one listeners to our tier two listeners, how the experience shifts across as you go towards more tier three plus cities. And then what are those friction points that you believe were your initial inspiring points to kick off?
Sure. The whole startup ecosystem has glamorized Kirana stores a lot, saying that, hey, Kirana is the lifeline of the economy. And, they are the ones doing everything. But the reality is none of these guys will actually go to a Kirana store and buy their grocery. Whoever is saying that, they're not the customers. They are not the people who would really step into that store and buy, which they're glamorizing. I believe that this experience has to change. But the Kirana stores, as they are structured today, need to change to be relevant. Right? Like, I'll tell from my example, right? Like, my grandfather used to run a Kirana store. Every summer holidays when I went, I would play in that store. My uncle started running the store. Right. And it's the same. It's not changed. Like 30 years mein same store, same format, same structure. the customer has changed.
Absolutely.
Every part of our life has changed so much. And if the store doesn't change, then they are going to be not relevant much longer, right? So
Right.
they are losing relevance, and everyone knows that, but they don't know what to do about it.
Right.
And the thought is that, I mean, there are like, say, a few dimensions which the experience can be better. When I was a kid, I went with my father for buying groceries. There were, maybe if you ask for toothpaste, there are two toothpastes. Pepsodent, Colgate, bada wala, chota wala.
That's it.
That's the amount of
That's true.
toothpaste available, right?
Yeah.
Now today, just Colgate would have maybe 100 SKUs. Right? That's, just Colgate has so many flavors, kids, adults, old people, sensitive, like, there's so much variety. And the same thing, another interesting thought we saw is the whole family would have the same toothpaste, the whole family would have the same soap, same shampoo. But today, my wife uses a different shampoo, I use a different shampoo, and this is not just for us, everyone can buy it. Now, think about it. The number of SKUs you buy in your house has, let's say, moved from 20-30 SKUs to 400-300 SKUs a month.
Right.
Now, the same format doesn't apply, right? And that's where we said the format needs to change. The quality and experience needs to change. The standardization needs to come. And that does not mean I'm trying to redo the whole Kirana guy, but I believe the way they exist today needs to change. Otherwise, they will become irrelevant very, very soon, which is happening.
That brings us to the main theme of today, which is that one idea. Now you've ideated and you've found out certain problems in the industry, you've found out certain frictions, you've got your own experience. But at this point, how do you and Anil think about solving these problems?
Sure. So we didn't want to do anything like which is in a luxurious segment, and all. We wanted to do more mass market because that's what we align and understand that better. But there was still, like, as you said, many ideas even in that basket, right?
Exactly.
How do we come to that one problem statement? I think it's a lot of iterations. We think about it, sleep over it, and this has all happened over a 6 to 8 month period, right? Now there are different ways different people think about it. There are people who say, "Kya launch karte hain, dekhenge, pivot karte jayenge." But I had gone through that kind of journey one time before, so I didn't really want to pivot too much, because pivoting it's continuously changing your goalpost and playing the game. So then we were like, and being a physical business, continuously pivoting is not so easy. As a tech product, you can still keep doing that. So we said, let's think about it, right? Like, let's spend that additional 1 month, 2 month doing research, meeting customers, and then pick one problem rather than just, trying to put a store and then say you are saying, okay, today I'm doing a grocery store, tomorrow I do a general merchandise, day after tomorrow I do apparel. We didn't want to do that. We wanted to kind of nail down the proposition, right? Now, so in that realm of things, there were some ideas which were like very tech heavy, right? Which were like, hey, build the app to support millions of Kirana stores. Or there could be more parts of the supply chain where you do like either the customer to store interaction improvement, you can do the supplier to store, or from the supplier to the previous level. So right, in the Kirana grocery valuation, you can add value at every place. But we said, if I want to solve the final end customer's pain point, I need to solve almost everything. Only then I can solve this part. And we didn't want to kind of be taking one slice of the value chain and say, I'll do it for 10,000 stores or millions of stores. We wanted to do like everything for a few set of stores, capture value and provide that outcome to the customer. So that's the model we picked. And in that also, there obviously, once we start, there is a refinement which happens. Even today, I would say from now to next year, there'll be some refinement, but we ensured that a lot of the thinking was done before we started our first store as well. There we went through this whole idea of, how do I operate stores with a lot of control, but without me operating the store myself, because we didn't want to do company owned, company operated kind of store. So we took a franchising route, and that had the structural advantage, which let's say a large retailer cannot copy, because that's not in their DNA to do franchising so easily. So that's how we picked. We looked at multiple ideas across different parts of the value chain and tech. So we said we want to do a full stack business, because it's also a lot to do with where both of us align, right? I was open to a few set of things. Anil was open to few. So whatever was the intersection is where we kind of picked, hey, this is where I and him both equally feel excited about. So that's where we picked. It's a collaborative elimination process. And we kind of came to focusing on SuperK there, and we started building this.
Very interesting, Neeraj. You went from your first store in Anantapur to now over 120 plus stores. What is the magical recipe here, Neeraj? What are the core elements What are the core sort of ideas you can share with our audience today, which could help us understand that magical recipe behind how has SuperK scaled to this extent?
Sure. I actually wouldn't say there is a lot of magic here. It's a lot of slow and steady execution, to be really honest. But we started our first store in Kadapa. So this is near Anantapur. And from there we started building. The first 2 years, the clarity for us coming from like previous experiences was that in 1 to 2 years, we should establish that there is a business model to what we are building. And only then we'll try to scale it up. Because once you scale, you can't change many things, right? That's where we were clear. We were always very focused on getting that business model right, getting economics as right as possible from the very early days. Look at numbers, look at P&L and all of those things we started doing from very, very early days. That's what kind of allowed us to, stay better positioned than many of our competitors. And we built the whole structure of our business model, how much margins we pay to our franchisee, how much supply chain margin do we get, how much supply chain cost can I have. All of those things were thought from almost, the day one.
Interesting.
And that allowed us to say, and at the end of 2 years, so first year we were in one city, this town called Kadapa, we did about 10 stores. The second year we reached about 20-25 stores. And then the next year is when we really kind of grew from that 20-25 to about 90-100 stores. And then this year again, we are slowly growing. We will go through different phases. There'll be time where you accelerate and expand. And then in a different year, you consolidate and become, better on all your metrics. So I think that's the journey we have had. First year was to get a model, that there's a model which exists. Second year was, is this model worth scaling? The third year is can we scale? Because, the model is there, it is worth building. But there was a question of, is this really scalable? So we proved scalability. And then the fourth year, now we are saying that can I actually show profitability as well along with all of these points? That's how we are trying to prove different things in different years for us. And again, maybe in a year we'll come to say, can it be like massively profitable?
Right.
Then I'll try to solve for a different problem statements. But this has been our journey this way.
Lovely. Given the execution heavy business that you ventured into, I'm sure early in the day, there were thoughts around wanting to make this a venture scalable model. It'd be very interesting for us to understand how your sort of journey went from seed to Series A.
Sure. So again, like many people say that, hey, this is not a new business. It's like centuries old business and people have been building kirana stores. Why do you need money, right? I think there are two ways to think about it, right? Obviously, there is a path where we slowly build the business over maybe 50, 20 years and do something out of it, bootstrap, slowly compounding. But the realization for us was that there we don't have any advantage to play, right? Then my uncle is as good as me. The problem is we cannot attract great people to work with us. At least a few people where we work and do high quality problem solving. So I think we wanted a place where it's not like so traditional that we're just building a kirana store after another or a supermarket after another and build it out. So we wanted something which can have a leverage, right? Because our value of time is also high. That opportunity cost is high. So we wanted to get some leverage into the model. That does not mean it is like a full highly leveraged model.
Right.
So to bring leverage, we need to bring capital. I don't come from a background where I can put like say tens of crores or even a crore into the business and do so. We had, and actually Anil and I, we put all our savings into the business. So we participated in our first angel round.
Wow.
All our savings went into the business to show that commitment and also put in, while there is skin in the game, put it more. Anil and I, we then went and raised a small round from friends, family, angels. All our rounds have been like much harder than we anticipated because we thought, I know many investors who have always been telling me that, hey, let me know whenever you start, we'll do whatever is right and all.
Right.
But that doesn't happen that way, right? And I know so many people who have expressed the same thing, that आपको लगता है कि आसानी से मिल जाएगा because you know the investors, but they have their own process. It's not like because you know someone will give you money. It doesn't work that way. Maybe it's a friend who will put 5 lakhs because he knows you, but that doesn't happen for an institutional fund or anyone. So we went through that cycle. The first year we raised, it was a small round with angels and some micro VC funds. And the second round, we kind of raised from like a micro VC fund. The third round was like this. The first 2 rounds happened in the first year. The first round happened around the early 2020. And the second round, we had to do quickly because we found an opportunity to raise during the middle of the pandemic.
it was a small round, but it gave us more lifeline. So we took that. And the third round was a larger round, which we raised. So now each of these things, right, go in parallel with our thesis or, our question saying, hey, with a little bit of money, I want to prove that there's a model which exists.
Right.
And with a little bit more money, I want to prove that this is a model worth scaling. And the next money should show scalability. And the next money should kind of take us to profitability. And I think that should be the end of raising money for us, because over the journey, we've also realized that when we are out to raise, it's almost always the case that you're not in control of your destiny, right? So,
right.
And then when you don't feel in control of your destiny, you can't take a 5-year long decision, right? For example, we were thinking about a certain decision in our warehouse. There are 2 types of racks. Now, one is great for the short term. For 2 years, it's better on my P&L. But in 5 years, there's a different choice, right? Now, how do I make which choice, right? If I was in control of my destiny fully, saying that, hey, I'm here for the next 15 years, there's no question, then I would make a different kind of choice. So we want to get there as soon as possible, because then I can make like really long-term choices and not worry about कि ये 2 साल के लिए focus करना है, 5 साल के लिए. I can always lean towards a long-term choice, which is not a luxury I have today, and I want to be there. So that's the journey we have had, and at every level, right? Like I think from the angels to micro VC to a VC fund to like a seasoned VC fund. So this is a journey we are having, and maybe the next rounds and all, we start going towards, let's say, a private equity kind of thing, because our business is now becoming more predictable. They can read the P&L and understand. Then the next round, we want to be our last round. And after that, we are saying that to be profitable and maybe go and list the company in a public market and, from there build it. So I think that's the thought which we are kind of taking towards.
Very interesting, Neeraj. I think we're all sort of interested to know the outcome of where this heads. Some of us wonder how your expectations differ when you're fundraising. Finding the right partner while fundraising is very important. If there's any thoughts or opinions you can share around how your journey went towards that, how your expectations were different from as you went towards raising your first initial capital to now your path to PMF capital. And as you can also tie this or weave this into how the investors' metrics changed around the same time when you're looking to raise.
Sure. I am a believer of thinking that any investor you bring on board, you're bringing them for a long partnership. And if they have, let's say, expectations which are different, then you have a harder time in the longer term. Maybe it's short term easy that, a guy who doesn't understand your business suddenly says, hey, take my money. It's easier because you don't have to do the amount of hard work it needs you to kind of convince them and show them your metrics and help them understand. But we've always, been very conscious of the fact that we don't want to bring someone who doesn't understand what he's getting into. When in the days when we were raising angel, a lot of my friends who said, hey, I'll put 20, 25, 30 lakhs. And I know that person cannot afford to write off that money. So we then made them do a very small check, or we did not take money from them. While it was easy, it's on the table, but we didn't want to take it from anyone who did not understand what they were getting into. So we tried to educate them about the business, the opportunity and the risks, and only then take the money. And at every stage, we were very clear that if there is an investor who doesn't understand my business, I should be really careful. Right? At least that person shouldn't be leading my round. They may be okay to follow. And we do the same thing with our franchises also. When they come and invest their hard-earned savings and set up a business, we look for people who understand what they're getting into. If not, it's a problem. And there were rounds where we got an investor who put in the effort and understood and knew the business versus someone who was giving us money faster and say, I'll give you a bit more valuation or a bit more money. And we said no, because we realized that, today he doesn't understand. He's feeling excited. But in a few months, he suddenly starts saying, hey, what did I do? And then he'll start asking me like, can you do that instead of this? Because that's what I think is the right thing, right? Because you didn't align with them. And you kind of got into a marriage without setting expectations for each other, right? Now you are kind of stuck with that, right? We didn't want to be in that place as much as possible. That was our very clear criteria, that everyone who comes in should understand the business, and we feel more comfortable when someone has actually done the hard work and has also made us do the hard work to understand the business. There's no one in my cap table who would say, I'm not even sure what you're building.
Interesting.
And the second thing is, when you asked about expectation from investors, right? When we brought in, let's say, some really good angels in the first round, we were thinking that, hey, these guys can add a lot of value. They can definitely add value, but they all have their own businesses to run. The best angels who helped us were people, you write to them a generic mail saying, hey, I'm doing these things.
Interesting.
They don't write back. They don't tell you like, hey, do this, do that. But when you reach out to them with specific thing, hey, I'm stuck with this. Can you help? They would immediately call. Whatever, however busy they were, they'll ensure that they call in a day or let's say half a day and help you out, right? So that's where I saw that you should go to your angels with a very specific problem statement, which they can help with.
Right.
And then they will help. Don't expect them to kind of send you a strategy mail saying, hey, why are we not focusing on profitability? That's not what angels do. They are generally there to help you for specific things, right? But the same thing with, let's say, a more institutionalized investor, they start taking a more involved approach where you send them a monthly update. They will take time to kind of say, why are we doing this? Why are we not doing that? Because that's what they are in for, right? So it's different at different levels, and you should also understand where to do, right? But that does not mean that you take your strategy from your investors. That's been like in our journey, we keep thinking, right? Hey, our investor is saying this, maybe this is right? Like, and the reality is even the investor is not intending for you to follow what they are saying, to the dot, right? They're giving you a point of view because they have seen a certain thing in their journey. They're saying, hey, why are you not looking at from this perspective, right? It's a perspective they're trying to show you, not a push, right? That's where we have to understand what's an opinion and what's kind of a directive. And you need to be ensuring that you are taking the call because you are in the thick and thin and you should be taking the calls, but ensure that you consider every viewpoint, don't have blind spots. They are helping you look better or see better. But then the final decision is which direction you want to go should be, the founders or the entrepreneurs as much as possible, because that's when you have conviction in your problem. I think the other part where the investors can, help and bring value is the governance aspect, ensuring that is your MIS structured well? Is your reporting happening correctly? So that's where you should actually take your investors' input very strongly, right?
Right.
So in governance, be very strong on the inputs and set it up. In strategy and direction, you take it as an opinion and input, because that's something which is very subjective, but having the governance right is not very subjective. You have to do it because it's important and they have experience in that factor where you should do.
Very interesting, Neeraj. I would like to double click on the whole metrics side of things. The expectations between the founder and the investor could differ at times. We've obviously seen the whole bull and the bust run in the past few years. We've seen how there's been growth at all costs sort of expectations, which in your business could imply should your number of stores go 10x overnight. But today I've seen more and more entrepreneurs come out and talk about building sustainably. What would you share with us in terms of your idea towards the idea of building sustainably and building frugally, if that's something that you perceive?
Sure. I think there is no one right answer, and it varies from business to business, person to person, year to year. I might be saying a different thing last year versus this year. And that does not mean that I'm changing myself a lot with markets, right? But you also have to change your style, right? Like, let's say in cricket, you can be a batsman with a certain style and form and fashion, but every pitch you have to play slightly different. Every bowler you have to play slightly different. So in the same way, even for us, every year is a different market. The first year we were very clear because we said, is there a business model in the first place? In the second year, we were like, hey, is this business model worth building? There's a model, but is it worth building? The third year is it scalability? Is it scalable, right? Now, in each of these things, there was always a choice, right? But we couldn't raise a lot in our first few rounds. And that restricted the number of choices. So when you actually have less capital, your decision making becomes easier because now you're saying, okay, I have these one or two options I can pick and move on and build it. So we had the luxury of not having too much capital. So we went on with the direction of saying, hey, get the business model right, because there's no other way for us. When we raised a slightly larger round, that's when the choice becomes a point. Like now with this capital, do you build slowly for 4 years or you build aggressively for 2 years? Right?
Interesting. Yeah.
It's a choice. Now, depends on, you have to do a little bit of, crystal ball gazing of sorts, right? Saying ki agle saal kya hoga, 2 saal mein kya hoga, 5 saal mein kya hoga. Our business is a business of economies of scale. If I get to a certain scale, my business becomes profitable much faster. Do I want to slowly grow and reach there in 5 years, or I grow faster and reach there in 2 years? Both have their own outcomes, slightly different.
Right.
And the capital which goes into also is different, right? So it isn't a, very straightforward choice. You will have to understand for your business model what is right. How is your investor aligned? How is your balance sheet allowing you to do these things? You have to look at all of these choices and make it. And more often than not, it's a gut call you have to take, right?
Absolutely.
You have to understand and say, do you want to grow really fast? Is your team ready? Is your product ready? Are you having some infrastructure issues which don't allow you? Maybe your competitor is scaling very fast because he has solved that infrastructure. While you have the balance sheet, you don't have the infrastructure, you can't scale, right?
Fair enough.
So everything has to align, and then you have to kind of go and do it.
What are the things that you believe was a good decision, but in hindsight, comes across as a decision which wasn't one of the best?
After our second year, when we kind of raised some amount of decent money, we had choices to make on infrastructure. Like, for example, a warehouse, a supply chain. We came from very frugal mindset.
Right.
So if we are looking at two warehouses, one is cheaper, we go for the cheaper, always. Like, we always did cost benefit analysis from the information we had that day, right? We said, I'm doing so much business and this rent will save me 2 lakh rupees a month.
Yeah.
So let me focus on the warehouse which has lower cost. And then there was a warehouse which I have to pay a bit more, but it was slightly better in terms of, infrastructure, the flooring, the ceiling, the thing. And that day we made a choice to pick a warehouse which was cheaper and immediately available. That day, the cost was not apparent. But once we started using it in 6 months to 1 year, when we grew really massively,
right,
then the wastage which we started seeing became a lot more than what I was saving in rent. Even if I go back today and say first principle thinking, that is where I will come to the answer. I am saving 2 lakh rupees a month. I should pick this warehouse.
Right.
But the data was not available for us. Once we saw the data that, for example, a dock height of warehouse, we said, ek banda laga denge, he'll pick up and put it up, or there's a guy who will load it. But then when we started seeing how much loading, unloading happened, we started adding a lot of manpower across the supply chain because my warehouse was not built for efficient logistics. And we didn't know. Then second is, we also didn't know how to invest, right?
Right.
So over time, once we burnt our fingers, burnt our hands on poor infrastructure, which kind of became a bottleneck, when we started scaling, it became too expensive and supply chain became very expensive because of these things. Now we are putting that investment into getting a new warehouse, which is built to suit for us.
Interesting.
But that does not also mean from day one, I should have taken a really good warehouse, because if my business model was not right, taking a very fancy warehouse, building a great technology, building a great team would have killed me.
Right.
But we should have invested a little bit earlier. And that would have allowed us to kind of have much better P&L. We made our mistakes in saying that, I will try to conserve cash on everything. Maybe we also made some people choices where we were trying to be really careful on their cost and said, I'll hire people only with a certain budget.
Right.
Maybe we were right in some places because it aligned to our culture, but in some places that budget prohibited us from getting some really good people. So,
right.
We can go back and say, but some things worked out well, some things did not work out very well.
Absolutely. No, I think cost allocation, especially in a supply chain heavy business, sometimes can be a frugal decision to make. Well, how do we perceive SuperK to be in the next 5 or 7 years down the line? What does it look like?
Sure. So I think, I don't think telling you numbers would make much sense, right?
Sure.
I can tell you, hey, we'll be in 10,000 stores, 20,000 stores. How does it matter? The real thing, what will matter in my mind, right? Obviously, you have to be at a certain scale to be there, is where, we want to be in control of our destiny. As I said, we don't want to be dependent on anyone to provide us capital to survive.
Right.
So that's one definite thing we want to be at. We want to do it as soon as possible. The next thing is that it should be creating the impact we wanted, right? One is, it is solving a valuable need for the end customer. And it is also supporting my franchisee to have a decent life, right? I'm not trying to make him like a luxurious thing and all those things. But to get there, we need to have a certain density of stores. We need to have a certain amount of scale to get there. So that's the reason why we'll get to scale, but not because we want to get to a certain scale, right? Like whatever scale allows me to become profitable and sustainable is where we will try to target, and we want to get there, in the next 3, 4, 5, 6 years. For the towns where we are present, the families which are transacting with us, we generally are able to take about 10 to 15% market share in a market where we become mature. So, let's say there are 20,000 people in a certain area. That means I want 4,000 to 5,000 people, which is about 1,000 families, to transact with me. And for those families, I want to improve their life significantly. I want them to have SuperK as a trusted partner for them on not just grocery, but many other things where I extend my value prop to the customer.
Right.
I want to be a part of their life in a very, very regular manner, right? Like where they depend on us and they build their life around us. I think that would be the aspiration, not from like a number of stores. That's a consequence of this aspiration, but that's not the end in itself. The end is to kind of be at a scale which allows you to be profitable and creating an impact and ensure that you have a very, very large impact on the customers you're trying to serve.
Absolutely. Thank you for that, Neeraj. So, Neeraj, as we come to a close, it always helps for entrepreneurs, listeners out here today, to get some words of guidance or inspiration, especially in the tier 2+ markets today. What are one or two things that you could share, or words of guidance or inspiration for anyone who's looking to build, anyone who wants to start up?
Sure. So we operate in very small towns, right? So there are people who just walk into our office. There are kids who walked in and said, "Hey, I saw your name in your story. I'm very impressed and excited. Tell me how to raise money," right? These are kids coming from really small towns. They have their aspiration and saying, "Hey, I want to build a business." But when I ask them, like, "Why do you want to raise?" They're like, "Hey, I want to come in your store," right? So, sure, like maybe when we all started, we were also a bit naive and all of those things, right? I asked them, like, "Why do you want to do this?" He said, "My dad runs a fairly large business. He's doing it profitably for a long time, but he has never come in newspaper. He's never come in an article."
Right.
"But you are doing, and because you have raised, there is someone writing an article about you. So I want to raise money because I want to try and
Be in the paper.
be in newspaper, your story, or, do a podcast like what we are doing." Unfortunately, there is that misguided sense for many people saying, "Hey, I want to raise for this reason." And they also think that, "Hey, if you raise money, you are sorted. All your problems are solved. You make more money." To anyone thinking about this, trying to raise money, I don't think you should worry too much about raising or being able to raise. There are like now a lot of examples which are coming out. People have spent like 5 years, 8 years building a great business. And I know so many of my friends who kind of are doing a traditional business, not glamorized. They make a lot more money than I do, right? In the end, I am not making anything today, but they make a lot of money. They own all of their company. They decide what's the future is like for them.
Right.
They define what and how and when to do. But while in the journey, they were always thinking that, "Boss, there is so much luxury for you. You can raise, you can bring people, you can do all those things." But I don't think in a 5-year period that matters, because they're making a lot of money, right? They're actually making a lot more profits than many of the startups I know. And it's bootstrapped. Maybe they put in like a little bit of family money and then they did it. So, don't worry too much about raising. If it is possible and if your business allows for it, please do it. But don't be like, that's the only path to kind of getting there. And this is what I see from a lot of small town entrepreneurs. They think this is elusive to us. So don't worry too much about it. In the long term, you might actually have a better life building a small business, bootstrapped and making money, than a large business where you don't make any money, right? So you
Absolutely
should focus on trying to create impact, but there's no one right answer there.
No, well said. At this point, thanks a lot, Neeraj, for your words of wisdom today, for sharing your experience today. It's been an absolute pleasure having you with us. So thank you.
Sure. Thanks, Abhinav.